Hello, everyone, and welcome back to a new episode of Rocket Lab Weekly. This is the uninterrupted weekly Rocket Lab episode, Rocket Lab Weekly episode 62. I'm quite impressed by that number. We have Scotto with us and Matt Money. Thank you guys for being here. And how has everyone's week been?
Can't complain. Yeah, it's been a good week. Portfolio's looking nice, so I'm just that much more paranoid, but can't complain.
Yeah, happy for a little bit of a retracement in the share price because it allowed me to get a couple hundred more shares. So excited. Rocket Lab specifically, cool. But a couple other things as well.
Yeah, I was also thinking like what like the Rocket Lab is like the only share I know. No, I mean there is many others, but like Rocket Lab had a serious pullback, but that was almost undone now by a lot of bullishness. Cool. So yeah, I don't know if you guys know, I managed to roll my cover calls on Rocket Lab. So now I'm up to $15 on strike price to 2026 January. And my hope is still that I will catch the stock, but I don't have hopes that it will be this year. Probably 2027 I will catch it. So one question, one of the biggest news, I mean, we will take it a little bit at the end of the show, but I just want to check it with you guys. Oh my God, Curtis, thank you so much for your super chat. By the way, Curtis has been kind enough to offer a plaque. He did it last week, and oh my God, and he did it to all three of us, guys.
Hot Curtis, man. The myth, the legend.
You are the man. So he has been kind enough to offer a Rocket Lab shareholder plaque, which I have here on my... Okay, sorry guys. I had it in the Peter Beck interview. I cannot show it now in person.
I can spot you. I got mine.
Exactly. So that's what it looks like. And he offered to send one for free to the next person who joins my channel. Last week, we tried to do one like the best comment or the newest subscriber to the channel, but the best comment didn't answer back. And I cannot track when people subscribe to the YouTube channel. So the one who becomes the next channel member, they get a free plaque from Curtis.
And that's going to be the same with mine as well. Like same situation. I was trying to get one to the guy who was on site during that haste launch. I want to just like say thanks for posting and nothing. So
yeah, I need to go back and check mine. I checked a day or two after we did the last Rocket Lab Weekly, and nobody really competed for what I wanted, which was like whatever the funniest comment was. But so maybe I just need to choose somebody that has never commented before. I don't know.
Yeah. So I mean, Curtis now confirmed that it's for each channel. So I don't know. You guys can pick something else. For me, the easiest to track is like a new channel member because that's time stamped. I know exactly when people joined and who. And normally the people who become channel members, like they communicate with you. Like they don't ghost you. So that for me. But I don't know if you guys want to have some other criteria on your channels.
I like that as well. I'll do the same.
Yeah. Good. Matt, what's your criteria? Is it?
I don't necessarily want somebody to have to get a membership. So, I mean, if somebody just wants to write a very funny comment that has not previously been a subscriber before, then feel free. But if you also want to become a member, that would be great as well. Much appreciated.
Awesome. Cool. So again, we thank Curtis for his contribution. And what was I saying? I was saying so. Oh yeah. So I wanted to just check the room temperature about the new NASA director, Jared Isaacman. Like, what did you guys think when you see this news? And we're gonna take this up in the episode, so don't go into like a super detailed answer, but just like, is it good, bad? Were you excited?
I think it's net good. Yeah, I'll just say that for now. I think it's a net good. I really like Jared.
I think it's not good as well. I think it's always good to have somebody favorable to have somebody that's been a part of the industry, as well as somebody that's an entrepreneur, so they actually understand the rules, regulations of business within America, and so that way they don't just have some sort of bureaucratic or Congress view of looking at things. They're not some sort of bureaucrat that's kind of been tainted by that, and so I think it's very pro business and also very pro space.
Yeah. And to be honest, when I saw it on my Twitter feed, at first I was like, no, this must be a prank, because I didn't even know he was on the radar to become a NASA director. And there was some other things, like, I don't know, Grant Cardone had a prank that he became like nominated for the director of national wealth education, or yeah. But I was really happy that this news was not a prank, but we will take it up in a bit. Just wanted to check the room temperature, but it looks like also the chat is, everybody is on the same page on this. Cool. So let's take the happenings of Rocket Lab this week. So the first update is we have the launch date for the new launch. The Owl is back. It's a new launch for Synspective. It's on December 18th. And this will be, Scott, correct me if I'm wrong, the 5th launch this quarter?
Yes. No, 4th. 4th launch this quarter.
Okay, okay. And we're still on track with one more haste?
I think so. Yeah.
Okay, okay. And the highest ever quarter is 5 launches or 4 launches? So if they do...
I think 4 is the highest.
Okay, so if they do 5, then it will be record-breaking quarter already.
Yeah.
Okay, cool. It's I have a hard time tracking this as good as you do, so it's nice to have you on here. You can just catch me if I say the wrong number.
I made a pretty bad joke. Somebody said, I forget what the launch is called. What is it? An owl? What is it?
The Owl is back or something.
The Owl is back, and I said, who? And I don't think anybody caught it on X, but anyway, bad joke.
That was pretty good. Now that you say it, sometimes in writing it doesn't.
You need that great comedic timing, like that that I have. Yeah,
exactly. So then we have some news about the Archimedes hot fire test, and I'm so happy we got to ask them in the interview why they are hot fire testing, because otherwise we would be having to eat this conspiracy theory that they must be still hot fire testing because, you know, the engines keep blowing up and they can't get it to work. And the fact that they're saying that they are doubling the engine test cadence is nothing but a bullish sign. What do you guys think?
Yeah, nothing but good news, in my opinion.
Yeah, I did like the best part. I think we might have touched on it last week, actually, as well. But the fact that they said, "Hell, let's even blow up one of these things," right? Like, even if they did blow up one, and it goes back to when they did the stage 1 tank, right? How they purposely blew up the stage 1 tank because they were trying to understand the materials that they were using, right? New materials for Neutron. They wanted to test the strength of it. And so with respect to that, I mean, you have a new engine on the pad. It's nice to know where, at least for one of them, where the limits are, right? They tested it to 102%, but I'm curious, could you get it to 130, 140, 150? Because at the end of the day, the thing that's going to help optimize is continually increasing. So we know we're at 13,000 kilogram to mass orbit. Then if we're reusable, if you're going down range, it's 15,000, or if you're expending, it's 17,000. So I'm like kind of curious, you know, if you're able to get a little bit more lift out of these rockets, rocket engines, you know, could you get it to 20K? Anyway.
So food for thought. The fact that they haven't managed to blow something up, does that mean that the engine is performing better than they expected? Like they are doing these tests like this will blow it up, like, you know, let's crank it up to 105, and then it's not blowing up. And then, you know, once you're past a certain margin, you're like, we like it. Like at this point, we're just gonna do the test to blow up the engine, and what's the point? You know, we're not gonna use it at 130%.
Scott, do you want to chime in, or I have thoughts?
No, go ahead. I'm sure. Yeah, go ahead.
So we talk about this a lot in the oil and gas industry. So like over designing facilities or over designing equipment. And so if you do something like that, and especially if you're doing it and replicating it hundreds of times, and it's over designed, then you might have excess materials they don't necessarily need. And so that would impact your margins on a gross basis. And it would also impact the fact that maybe it's more mass that you're putting into the engine that actually needs to be there. So, but at the same time, if you undersize it, then of course you have the exact thing that you mentioned. You know, would it blow up? Would it actually be able to achieve what it is? So it's a fine line, and generally speaking, with engineering equations all the time, there's always a safety factor of something, right? Whether it's maybe accounting for poorly constructed materials or heat limits showing up differently than expected or something of the like. And when you add on so many safety factors, that's where you get to the place where, you know, you might end up having way excess more material involved than you might necessarily want. And like we stated, could shave off, unfortunately, on a gross margin basis, some of that profitability. So not saying it's bad, but it's definitely good that, let's just say, we got to the 102% and we didn't get to something like 90 or something like that. But at the same time, you don't necessarily know until they blow it up, right? What safety factors they have used and what they can pull out. But like Peter mentioned in the interview, this isn't the first iteration of the rocket that they're going to do, right? There's going to eventually be a version 2 and a version 3. And I anticipate with what they show, once they actually get it to orbit, they test it a bit, they'll be on to version 2. And I'm very curious to see if it has a very comparable design change, like what we saw with the Raptor 1 to the V3, right? Where it now looks very streamlined.
So in essence, what you're saying, the fact that they haven't blown up an engine, it means that they are doing wasteful spending and they are putting a lot more mass and material into the rockets than is needed.
I'm not saying they are.
I'm kidding. I'm kidding.
It could.
I was kidding. We went from the conspiracy theory of the engines blowing up to now wasteful spending and too much mass. No. And keep in mind, what's tricky with these engines also is that they're planning to not use them at 100%, right? So even the fact that they got to 102% and it didn't blow up, it's kind of like, why push it to 110 when you can use the engine to test other things when you're anyways planning to use it at 20 or 30 or yeah. Mm-hmm. So there's a lot of viewpoints here. Anyways, it's definitely a bullish sign that they are doing more and more tests. So now the next news of the day is it was Space Equity's Twitter account that tweeted that Rocket Lab filed a new Form 8K, which is usually current happenings, and in which they were informing us, the shareholders, that Peter Becks shares are going to be converted into preference shares. And in the beginning, I was reading through the Twitter comments that this would let him have more voting power. But then I read through the thing and I saw someone also pointing it out on Twitter that it's not the case if you read the fine print. But apparently there's a thing that comes with this is a new compensation package for Peter, which comes with a little bit of dilution. And I'm happy we have you guys here because I didn't find the exact data here. So if you guys know more about Peter Becks' comp package, please let me know and explain it to the audience.
Yeah, I mean, there's a lot to go over. There's a few different parts. There's like the salaries increasing as well as the bonus. And then there's 3 different awards that are kind of worth mentioning. There's two mentioned in the form that you're looking at now, but then there was also shares that were awarded on December 3rd. So the base salary is going from 500,000 currently to 800,000. That's effective retroactively October 1st. And there's an eligible bonus for up to 100% of that salary. For comparison, when Rocket Lab went public, Peter's salary was around the $300,000 mark. Actually, I can bring up the bonus as well for that year as well. No, actually, there wasn't a bonus listed for 2021. Then to get into the awards, there was 800. We'll just call it. We'll round the numbers. There's 800,000 RSUs, which, like, basically just think of these as common stock in the long run. There's a whole conversion process, but to keep things brief, there's 800,000 shares that were awarded on December 3rd in relation to the 2021 compensation plan. So, I mean, if that's current market value, that's like what, $20 million award.
It's pretty good.
That's really good. And then on top of that, what was detailed in the document that you have on the screen, Vince, is an additional 631,000 RSUs, or what will be stock in the long run, and then another 158,000 that will vest over a period of time. So there's like a big batch of, we'll call it roughly 200 to 300,000 that will vest on March 1st of 2025. And then the remainder is going to be vested over through to the end of Q4 of 2027. I think I got all of, and then there's one more part, is that he's eligible in starting. Yeah. So that was the 2024, the awards that we just went over for. There's 2021, then 2024. And then looking forward, he's also eligible in 2025 for up to $8 million in RSUs. So that will vest over 4 years quarterly.
I'm just curious, do you know, because you said his yearly salary is $800,000 and then he is eligible for a bonus that is 100% of this. Do you know like what triggers the bonus, or?
No, and that's kind of like a recurring theme throughout this entire thing. I'm like, what happened from 2021 till now? Because I mean, like Tesla's a good example. It was like for Elon, it was like, if revenue hits this, you get so many shares. If market cap hits this, you get so many shares. And I'm not sure if it's like that. If it's not, I wish it was. But I'm not sure what exactly triggers all of these awards.
Yeah.
Or the bonuses, for that matter.
I mean, to be fair, also, if we're speaking about the RSUs, it's like 20 million, 10 million, like very big numbers. And the bonus on the salary is only, quote unquote, 800,000. So it's, yeah. But cool. So what do you guys think? Room temperature check, is it deserved, or you think it's too much? Or I know I'm voting for this, like I think he deserves all the money that Rocket Lab can give him. But what do you guys think?
Well, I think the thing that well, firstly, let me say, I think it's deserved. I think he deserves similar treatment to how Elon has gotten at Tesla, right? And I think that the preferred shares, the way I look at it is right now it's basically put at a 1-to-1, but pending whatever the board sets as sort of internal metrics that they want to hit, whether it's revenue targets or maybe launch cadence, what have you, they could use it almost as like a, hey, this is where you're at today, right? And the way I look at it is they kind of have this, whatever it was. It was, how many shares was it? It was the 50 million shares, about 51 million shares. They could take that and multiply it, and say, you exceeded our expectations. We're now going to multiply that by 25%. And so it kind of puts like a line in the sand as to like, here we are today. We're going into the second inning of our sort of growth, or maybe call it the third inning, whatever you want to call it, and we'll reward you from here on out. Let's just say based off of what we want to give you as RSUs, and we'll have those performance metrics. But to me, I think it's just a line in the sand to kind of differentiate where it is today versus, I think, now getting into a place where they're a real organization that obviously is worth tens of billions of dollars at this point. And you need to kind of differentiate what was before and what comes after. And it's likely that they're getting to a place where they're across multiple states, multiple nations. They're actually becoming like an international company that they need to start taking into account long-term succession planning and long-term movements. Whereas before it was kind of like a startup, right? You didn't necessarily need a lot of those things. And so this is just the growing pains, in my opinion, of what ends up happening when you become a larger company, and you really need to look at how things are issued on a point forward basis. And I think it's also just making sure that the family is set up appropriately. And at the moment, everything's 1-to-1, right? It doesn't seem like for now it's like he's multiplying or getting 3 times as much share ownership or anything of the like. It could end up being that if he hits certain metrics, that those preferred shares grow 2x, 3x, 4x. But at the same time,
yeah.
Anyway.
Yeah, I was just going to say, if anything, I feel like that this new compensation package is a bit light, because I mean, okay, obviously I don't know each company's CEO compensation, but I know a lot of CEOs that earn a lot more money. And how do you call it? Like I see this comment a lot, like what if Rocket Lab would be bought out, right? And technically, like, people are free to make an offer on Rocket Lab, and Peter Beck does not hold enough shares to like block it himself, So I would not be unhappy to see, his voting power increase, or, him getting like an Elon-esque package where he, let's say triples or quadruples the revenue and the market cap of the company, and then he gets like another 10% of Rocket Lab or something like this. I don't know what you guys think about that, because I mean the 800,000 salary a year is like, it feels a bit light for a multinational CEO engineer.
Sorry, what the salary seems like?
Yeah.
No, you'd be very surprised, right? When you hear about these large CEO compensation, a lot of it is mostly through stock. Very rarely will a CEO actually have a salary north of $2 million.
Really?
And it's really mostly through the compensation. So, and generally speaking, the first year that somebody is CEO, they don't have a lot of salary or anything. And a lot of that is due to the fact that you have to hit performance targets, right? You were the leader of the organization and you get RSUs. And it's really only after you get 3 or 4 years. Generally, stock options are given on a 3 to 4 year rolling basis. So you kind of have to get to a point where you hit your objectives for that year. They give you, just like how they show here, the $631,000 for fiscal year 24. It's a $15 million package, right? So you're only getting $800,000 in terms of salary, but the majority of your money, in this case for fiscal year 24, is going to be 5/16 of that. And then after that, on a quarterly basis, he gets more of that, 650 some thousand shares, right? So that's generally how things work in companies where you end up having CEOs making large amounts of compensation. It's done through stock, just like Elon, right? Elon, I don't think gets paid a very large salary for Tesla, and the majority of the money that he's getting is from shares.
Yeah. Okay, but then let's put it this way. Again, just food for thought. So he's already a billionaire, right? And we want him to be aligned with shareholders. Like, how much is a motivation does it give him to, like, bust his butt for a year and then get like 10 million in stock compensation, when on a big green day he makes like 100 million on his existing shares?
I think that's where the preferred shares come into account, right? Because in that respect, it was 65 million shares. Let me just double check. I keep referring to it. I should remember. 50 million shares, 51 million shares. So if that's the case, I mean, they could easily just throw a 2x multiplier on that, and 50 million. Let's just do the math really quick.
But you mean million, like for the voting power, 2x multiplier, or for the or that you split it like.
So let's just take this into account. As of today, those 51 million shares is worth about 1.2 billion. Right? They have a what do they call it specifically? A special committee, basically the board of directors that are working together to kind of understand what the retention and benefits of that is. And so if they wanted to, they say, you know what, you've met whatever targets you need to. And they could, in the background, they could say, hey, we're going to 1.5x your preferred shares, 2x your preferred shares, or 3x your preferred shares if you meet these targets, other than, on an annual basis, these annual contracts that you're supposed to meet, that they give them, say, the $15 million in shares on it. So it goes back to saying they could have this normal annual 50,000, 60,000 shares that they give him for hitting this normal fiscal year targets that they give during the conference calls. But at the end of the day, they could say, we need to hit a market cap of, let's just say 25 billion by 2030. And if you get there, we're going to 3x your preferred shares. Well, that turned from, if you think about it on an annual basis, you're talking about $15 million in compensation. But if it hits the $25 billion market cap, it went to basically $1.2 billion worth of shares to $3.6 billion worth of shares because they tripled it, right? So, I mean, that's part of it that you need to take into consideration.
All right, cool. So let's go over to, or do you guys have anything more to say on this topic, or we're free to go on to the next one? Okay. Then we move on to the next one, and that is Jared Isaacson becoming NASA, or being nominated to become NASA director. And what kind of, so first I've seen that some people were saying that he's too close to SpaceX and he's going to award everything to SpaceX. But luckily, I think that this is a misjudgment of his character. I think that he is very much against waste and like traditional space or old space. This is what he tweeted about Rocket Lab. And this was during the earnings call of Rocket Lab, or like shortly after the earnings call of Rocket Lab. So he's clearly paying attention and likes Rocket Lab. And this article that I was showing here is Eric Berger's Ars Technica article about the things that would change. And he writes that under the Trump administration, NASA's role is likely to focus on stimulating the efforts by commercial space entrepreneurs. Isaacson's marching orders for NASA will almost certainly be two words: results and speed. NASA, they believe, should transition to become more like its roots in the National Advisory Committee for I can't say this word, which undertook, promoted, and institutionalized aeronautical research, but now for space. So when I read this is super bullish for Rocket Lab for me. But I'm curious, what is your guys' take on this news? And how bullish or not bullish does it make you become on the stock?
I mean, on Rocket Lab stock, you mean?
Yeah.
I mean, I think it's a net positive. Like I really like Jared, and I don't get a vibe from him that he's someone who is controlled, or like, I don't think money means to him what it means to most people. And I think that's what ultimately has got him to where he is today. And I think anybody who hasn't watched Countdown, it was a documentary that's the lead up to the inspiration for SpaceX mission. I highly recommend that one. It's phenomenal. And that's actually how I got introduced to Shift 4. And it's one of those rare instances where I purchased some of the stock just sight unseen. Just watching the documentary, I'm like, I like this guy. I like his character. If his management team or anything like him, this is something I want to be a part of. And I mean, that's obviously I did a lot more due diligence since then, but it's I have nothing but nice things to say about Isaacman and his character and his motivations.
Yeah, if Scott buys a company sight unseen, it has to be a pretty good documentary, because I know Scotty loves his due diligence, which is it's not a hit on you, by the way. I very much admire the way that you do due diligence. But can you remind me of the question again? Sorry, I was reading the 8K and I got distracted.
Yeah, sure. Just before I do that, do you own shares of Shift 4 already, like today also?
Me? Yeah.
So you got hammered a little bit when this news was announced.
Oh yeah, don't feel bad for me though. It was one of those things where it's another rule that I broke is during one of their earnings, the news came out, and I kind of looked at the stock, like did a quick comparison, and it was like right because they report in the mornings before markets open, and I really liked what I saw, and I've been thinking of adding a meaningful amount more to that holding, and the earnings came out. I loved what I saw, and usually I wait for like a 3-day period before or after news, but that one I was like looking at the market, and I'm like, it's one of those moments where I feel like I'm going crazy, but I'm just going to trust my gut. Bought like the majority of my position in one day on that, and it just popped like 12%, and since then it's up like 150% in a short period of time. So
congratulations.
Congrats. Yeah, that's really good. Okay, so we don't feel bad for you. So the question, Matt, was like Jared's nomination, like how do you think he's going to affect the commercial space, and how bullish does it make you or non-bullish on Rocket Lab and its prospects?
Yeah, I think just to echo the comments that I made earlier, right? He seems like a pretty good entrepreneur. He's an astronaut. It seems like he's been around the industry for quite some time. So all those kind of, to me, point in the positive direction, right? He's not some bureaucrat that's never even seen space before or hasn't been involved. Like a lot of times, some of these people are bureaucrats that just need a cabinet position, and they've never been involved in education or housing development or anything of the like, and they're just there. In this case, Trump's really trusting the folks that are really good at business, right? People that know what they're doing when it comes to certain regulatory environments to ensure that they do a fine balance, right? I don't think it's about just letting anything be a free-for-all, right? It's about putting the appropriate amount of regulations in place. And I think sometimes what ends up happening is you go from administration to administration, more regulations get put onto something, and that regulation might interfere with a previous regulation. And next thing you know, you're adding more and more costs to something that doesn't necessarily need to, if you just were to say, wipe the slate clean and kind of have maybe a good way to put it is almost zero-based regulation. If you just cut everything back down to zero and you say, what are the regulations now that we know need to be put in place, rather than having all these previous ones. And that's, I think, one of the things that I admired most about the first Trump administration is he wasn't about just getting rid of all regulations. He was saying, hey, if we're going to put a regulation into place, we need to find somewhere else where we're going to eliminate one or two regulations to make sure we're not over-regulating, because very often we find something might have been put in for political reasons and not for safety or things of the like, and maybe for environment. And we found out that maybe after further tests, that might not have necessarily been true, or we've learned more on the topic. So it'll be nice to have somebody that has experience in the industry leading it, rather than some sort of bureaucrat.
Mm-hmm. And I mean, not even just the experience. For those who aren't too familiar with Jared, he basically approached SpaceX and was like, hey, I don't have what NASA wants for me to be an astronaut. So what would it cost for me to just put myself in space? And he brought along a few, well, I'll just call them friends, for lack of a better term. There's a lot more to it as well. But and then actually you guys saw it, that spacewalk, that Polaris Dawn. This is also, I think, funded. I'm not sure if it's entirely funded, but in part by Jared Isaacman as well. And that's a 3-part series, with the first being the EVA that we saw with him coming out of that capsule, and the second launch is also on a Falcon 9, I believe. But then the third mission in the Polaris Dawn program is actually going to be Jared Isaacman in Starship. So I think that's really well. But I mean, will he do that now that he's assuming all goes well? Is he going to still go through with that? I sure hope so. Another big question mark too is, like, I think he has a pretty hefty position in SpaceX stock. Like, do you think, Matt, do you think he'd have to sell it of that stock so that he's not looked at as being biased, or what do you think happens with that?
I don't know what the regulation is, right? I know as president, you definitely have to. And I feel like as Congress, I think you might have to. But I'm curious, as like a cabinet member, because keep in mind, like, Trump didn't necessarily throw away all of his ownership of the Trump organization, right? The whole real estate empire that he kind of has. Because I think it's worth like 10 or 11 billion dollars, the whole thing of it. But I think he put it in some sort of trust, if that makes sense, where he had limited ability to make any sort of decisions. So I wouldn't be surprised if it was something comparable where it was like, but that's a good question. I don't know the answer. I'd actually like to kind of look at it, knowing because you have people. Actually, it gives me a different thought. So instead of directly answering your question, I'm going to kind of deviate and let me know if I'm going too far off topic here. Okay. But that might be why Vivek and Elon are part of Doge rather than being actually part of the cabinet, or like sort of, because what could have ended up happening is Trump could have easily been like, look, I want you guys to be part of this. And they could have easily just been like, you know what? We don't want to get rid of our Tesla shares. We don't want to get rid of this, that, or the other. So give us some sort of committee position where we wouldn't necessarily have to do that.
I see Mopbox is asking if Isaacman holds SpaceX or Shift4. He holds both. I'm also curious too, like if he is awarded this position, there was a mention that he might step down from Shift4 as CEO, which is like, I think that's what was the bit, that sell off that we saw on the day that the news broke, is like people kind of panicking, like, oh, because he's the founder. It's a really cool story. He founded Shift4 when he was 16 years old. It's kind of funny too. He wasn't being taken seriously in these meetings for obvious reasons. So his dad would literally come into the meetings and do the negotiating on Jared's behalf, because they were like, this child is not running the company here. Like, who are we kidding? But yeah, you're like, founder, CEO, there's no better combination than that. But if this position is awarded and he does step down as CEO, I'm personally hoping that the stock continues to slide. Because over the couple of years of like due diligence with Shift4, I'm nothing but certain that it's not just a one-off. It's kind of like Tesla too. Like if Elon left Tesla, a lot of people would freak out. But I'm like, if you know the rest of the management team, there's nothing to be worried about at all.
Interesting. Didn't you? Okay, so he holds SpaceX shares, but isn't it also that Shift4 is handling all the transactions for Starlink?
That's right. Yeah.
So he's like multiple ways connected with SpaceX.
Yeah, layers deep.
Yeah. But again, I like on anything that I have read about him, it's more like it's Boeing that needs to be scared, and all the cost plus contract guys that need to be scared. And I think Rocket Lab is going to have a bonanza in this new space administration. All right, so now after we covered this news, I wanted to little bit look at some tweets about Rocket Lab valuation, to go a little bit nerdy, and then we can round off the show after that. So Tim, who has been a guest before on Rocket Lab Weekly, had a couple of really interesting tweets. So one of them is, two of the most wealthiest people on the planet are saying that their respective space companies will be worth more than $1 trillion in valuation long term. Rocket Lab is currently valued at 12 billion, yet people are taking profits. Like Jeff used to say, for the space industry and Rocket Lab is particular, it is just day one. The future is looking bright. So I think it's best to take the tweets, not one by one, but as a string. Okay, this one is a very long one. I'm not even going to try to read it. I can just basically summarize it. It's someone made a bearish tweet. This is the tweet. The moment SpaceX's Starship works fully. Sorry?
It's not showing on the screen.
Sorry. Thanks. Is it showing now?
Yes.
Is it? Yeah, good. So the moment SpaceX's Starship works, fully reusable Rocket Lab is finished. And the logic of the tweet is that one massive Starship launch with 100x payloads costs less than a puny Rocket Lab launch, makes Rocket Lab's launcher completely redundant, and Starship's massive reduction in cost leads to a different kind of payload design. Satellites won't be designed anymore for the absolute lowest weight, using only costly and exotic alloys to take every gram off, but with more mundane and heavier materials, making satellites a lot cheaper and last a lot longer, largely due to more onboard fuel for course correction and redundant systems. This orientation in satellite design will rule out Rocket Lab's launchers as a viable launch vehicle. And this is a very frequently used bear argument. And Tim did a very, very good post about this. As you can see, it's very, very long. I strongly suggest you guys follow him. And his point was that whenever Rocket Lab CEO and Adam Spice speaks, they are bound by the US GAAP accounting principles, and they cannot misrepresent anything about the company because they're a publicly publicly listed company. And the thing is that when you calculate the cost per flight, he lists out like what is it that you have to calculate into when you look at the GAAP numbers. And he's saying that, you take the fuel cost, the fee to at the launch range, the separation systems. This is the obvious. But then per each rocket build, you have material costs for the rocket, salaries for the factory employees, machine hours, depreciation of factory buildings, transportation costs, and then each launch facility, you need to deduct depreciation for launch infrastructure, salaries for launch staff, and security for launch range. And he's saying that when Elon is speaking, he's speaking Elon GAAP numbers because his company is not a publicly listed company, and he is not bound by the same laws as Peter Beck and Adam Spice. And Elon conveniently leaves out, and he only speaks about like the fuel cost of the rocket and some small other costs. And then he mentions in this tweet that Adam frequently jokes that we raise money to pour concrete, meaning that the rocket is actually like a very how do you call it, a relatively small cost in the launch, because you need all the facilities, the people, the launch pad, and all these things need to be amortized. And his conclusion is that yes, even if Starship is fully reusable, Neutron is still going to be, like, if you look at the GAAP figures, Neutron is still going to be competitive, but Starship is going to have basically the mass market, and Neutron is going to have like the dedicated market, just like we have with Electron. Oh, that was a very long one. I don't know if you guys have any comments or this one, or disagree, or yeah.
I mean, I don't know, Scott. Before I'd taken off on a huge monologue, do you want to go first?
No, go ahead. Go ahead.
All right, monologue begins. Let me get on my soapbox here. No, I'm just kidding. I just think I agree with this guy. Actually, I never followed Tim before, so I appreciate you. It looked like he has some really good insights, so I need to spend an hour or two after this. I'm surprised. I normally try my best to follow back the good quality content creators, so thanks for bringing them to my attention. I agree a lot with what he said here. I mean, you kind of have to take whatever this gentleman, AJ, with a grain of salt. Even if the Starship demand does increase massively, what's the incentive for SpaceX to lower their actual cost to launch, right? I mean, it's all about supply demand. Why would he launch something for Synspective, or why would he launch something for Black Sky if he's only going to make $1 million here or there? If he can say, hey, the barrier to entry for me is $50 million for a Starship launch, right? It just doesn't make any sense. So you'll always have a need for small launch because it's always going to cost a fraction of what it would cost for Starship, Neutron, or Falcon 9. So no matter what, there's always going to be somebody. Hell, I probably in my lifetime will never be able to afford a Starship launch, but just for a flex on everybody, if the stock price keeps going the way it is for the next couple of years, I might be able to buy an Electron launch. I can't say that for Falcon 9. I can't say that for Neutron. Hell, if I could say that for Neutron, I probably wouldn't be here. I'd be probably rubbing shoulders with Elon or something. But let's just take it as what it is. I mean, I just think that this is just people hating on something or trying to push it down, and eventually they're going to come to a realization that they were wrong, right? Just like how I came to a realization I was wrong about Tesla. I just don't think that people necessarily understand fully that, just because there's a larger company out there, the same thing goes with, how do I say this? Same thing goes with full self-driving. People assume because FSD is run by Tesla and it's run by Elon, there can't be a Waymo. There can't be something else that's out there. There's still two telecom companies. There's Verizon and there's AT&T, and there's also T-Mobile, right? I mean, you can have multiple companies trying to replicate and provide services. Same thing with like Starlink. People are like, oh, ASTS is going to zero. Rocket Lab can't enter the space either. It's just like Starlink's already up there. It's just like, I get it. Like, yes, they might have a competitor first start advantage, but at the end of the day, there's always going to be competition, because that's what actually drives down the price for a lot of these things. If there's no ability to drive down the price, then you're going to end up what happened with the U.S. government pretty much. And basically the cost to launch is just going to stay stagnant and flat because there's no incentive to try to increase margins over time.
Yeah, good points. Good points. Somebody's asking, what would you launch on the Electron?
I launched myself. Get away from me. Get away from you. Get away from you, poor ass people. No, I'm just kidding. No, I don't know. I'd have to think about that. But people, I've joked around with some people in the past. I'd have to actually think, what would I want out there? Yeah.
It should be something fun, like a huge Rocket Lab and Palantir to zero sign that is like visible.
I might have to have Curtis make me something sick. Yeah. Although the first Falcon 9, maybe it wasn't the first, but the fact that he launched the Roadster out there, that's pretty badass. That's going to be hard to compete with.
That's very badass. Yeah. We're gonna see what they launch on the first Neutron. Maybe it's Peter Becks' famous jet ski that he has. I mean, we'll see. But it's definitely hard to compete with the cherry red Roadster. Cool. Okay, so here's a next one, and people are not going to like me for this, but I kind of agree with this tweet. I'm not, definitely, as you know, I'm not a Rocket Lab bear, and this is only for the short term. So Rocket Lab challenges for the current $12 billion market cap. Number one, revenue 2024 is estimated to be 440 million. Revenue 2025 is estimated to be 542 million. Number three, running out of cash in 8 quarters. Capital raise likely in second half of 2025. Diluting existing shareholders. Rocket Lab should raise capital now. Additional delays with Neutron. Number 5, Neutron flight failing in 2025. So at this point, he's like mentioning this as risks. He's not saying that Neutron flight is going to fail or that there's going to be additional delays with Neutron, but they can happen. Number 6, no revenue from Neutron until 2026, even if test flight in 2025 is successful. Number 7, missing analyst estimates. Number 8, analyst downgrades for reasons listed above. Summary, relative to current market cap, revenue is too low, cash burn is too high, will require additional capital raise, is and Neutron will not contribute meaningfully for 2+ years. Conclusion: the company has great potential, but is facing meaningful challenges in the next 2 years, which are likely to result in high stock volatility. Prospects look great if you're willing to hold for 3+ years. What did I miss? And to this, I answered that I think this is a fair analysis. I agree that these are possible short-term headwinds, but the future is still very bright. I don't think a capital raise is given, but I think that there's a 50-50 chance that they need to raise additional capital. And I think that they also might be awarded a lot of contracts that maybe don't contribute to revenue in the short term, but they boost up the stock price. For example, the Mars Return Mission is a possible $2 billion contract award, but it will probably be delivered in 10 to 15 years, which is only 200 million per year in revenue. However, once awarded, I'm sure it will be a great catalyst for the stock, basically. So we have seen like three different tweets about the valuation of Rocket Lab. One is like it's going to $1 trillion, so why even worry about that we're at 12 billion? One was about the competition, and you could see a bull and a bear argument. This is a very balanced episode today. And this one is like a short-term analysis of short-term risks and numbers. So I'm curious, what do you guys think at the current price level, short-term, long-term? Where are you guys at?
I think short-term, it's pretty rich. And I mean, it's kind of what we talked about on the show last week, Vince, but a medium to long term, you're probably going to do fine. There's a couple like little nitpicky things that I would go at with this, like the cash for 8 quarters. I'm not sure how he's arriving at that. Maybe I think he's just doing cash and equivalents and not including marketable securities, restricted cash, etc.
Or he's extrapolating the neutron burn, that it like stays the same. I agree that is wrong.
Not even like, because right now they're burned. Well, no, like I have, like I just like I'm not even trying to pick on this guy. Like I think he brings up some very valid points, but I just don't understand. Like it's almost like he's expecting a higher burn rate, or maybe he's just not factoring in the other stuff. But maybe should even
in any case we are burning cash, and the cash cash is trending towards zero currently. Like I'm at like zero cash in 2027, assuming there's no additional cash brought in, but I mean, by then there will be. And then the other thing that I'll pick on is the 10 to 15 years for Mars. That's in like 4 years. In the proposal, it was like 2028. No, I mean, how do you call it? Because we asked this question in the interview, right? And then Peter said that to have like a 2030 on when the mission completes, it would be a major achievement. Like to not have it end in 2040. And he said that like he thinks like 2035 is like tough but doable, something like this.
Okay, so, I'll listen back to that again. Okay.
Yeah. So that would mean, because you're correct on like some parts of the sample return will be delivered, right? But the whole 2 billion is going to be like delivered over 10 15 years. Obviously some times there is more revenue recognition than other times, but
okay.
For me, I mean, I could see, if you're looking at it from a current financial perspective, why it would be overvalued, and I would agree, right? But I think if you look at it from a 10 to 15 year time horizon and lens, and recognizing that we are on a list of ever dwindling reduction in, or I guess Rocket Lab is on an ever dwindling list of companies that will be able to provide launch to space. Knowing that there's still people that are trying their best, but and maybe have in the past, but are either say giving up, or they are still in the attempts of trying to get capital to do so. I have a feeling that you're starting to recognize that these guys have a successful program. If anybody is number two, it's these guys, meaning Rocket Lab. And within 5 to 10 years, it's likely going to be a 4 or 5, maybe 6 players that have that ability to, and how close are they to delivering a sort of medium launch like vehicle? I guess it's up for debate, right? And so I think that is what people are paying for. They're paying for the opportunity to be number 2 in the space, knowing that SpaceX is a $250 to $350 billion valuation right now, pending obviously the tender offer that's kind of being discussed. But if you think about it, maybe other than ULA and Blue Origin, or I guess the ESA, how able are you to easily, if you're an American or NATO country, get things into space? You're not going to go to India. You're not going to go to China. You might go to Japan. They're starting to launch things off and do rather successfully as well. But you're not going to go to China or India, who are probably the most prominent outside of, I guess, the European Space Agency and the private American companies, or public American companies rather, to put things into space. So your list is dwindling, right? And I think there's a moat now of people recognizing that these guys have systems down. It's going to be, it's going to require a lot of capital up front. And what would that capital be? To me, it would probably, if you don't do as successfully as SpaceX or Rocket Lab, you're probably going to need $12 billion. Why? Because Relativity tried doing it with 5, and several other companies tried doing it with several billion, and they are now bankrupt or failing to get more capital. So what is the barrier to entry? That is, I think, is why you're paying $12 billion market cap for Rocket Lab. It's not because it is technically financially worthwhile to do that. I think it's based off the fact that if you wanted to replicate and get where they are at today, with the amount of experience that they have, it would be worth $12 billion. That's where I think the $12 billion market cap valuation comes into play. Will I think that it's financially a $12 billion company? Not before 2028, probably. I'm very curious to see what run rate we get to in 2028. What big thing that I don't think is included in here with this $12 billion market cap valuation is also the constellation revenue. That is the huge driver for SpaceX as well. And so until I have a finer, it's very hard for me to understand, because I could see with HASTE, Electron, Neutron, all that being a $25 to $50 billion company, where I don't see us getting to 100, 200, 300 or plus, is without understanding what constellation looks like and what kind of revenue stream we should be expecting. Because we hear things like we should expect north of 50% margins, right? You have capital expenditure up front, and then you're kind of going a CapEx holiday. But what I don't understand is that a $10 million a year, or is that a $500 million a year, or is that a couple $1 billion a year opportunity? And so that's where I struggle to get beyond this $25 to $50 billion market cap valuation. And I know, and I'm very confident, if there's people that would be successful in this business, in terms of getting it up and running and making it worthwhile, it would be Jeff, it would be Elon, or it would be Sir Peter Beck. And so to me, I'm going to put my money where my mouth is, and trust that Beck knows what the hell he's doing, just like he's demonstrated to me, for the past 3-4 years as a shareholder, and he's demonstrated to others since 2006 that he has a good idea, along with Adam as his wingman, to be able to figure out how to get this market cap way north of 50 billion. So,
yeah, I like the points that you have raised. So if I translate what you're saying, like, now is not the time to go margin and options, maybe, because financially the price doesn't make sense. But if you have the money and you buy stocks and you DCA, it's still like you're not making a mistake buying here.
Is that a question or is that a statement?
Yeah, sort of like if I would translate into action into what you said. is like maybe don't margin out or YOLO at this point, but it's like if you have the money to buy the shares and hold them for a long period of time, you're still going to be okay at this level.
Yeah, I don't. Hopefully, I don't go on another soapbox here, but I see a lot of people saying, "Well, my cost basis." I had the conversation with my sister earlier today. She's like, "My cost basis is $10," and I went off the fact that, well, I was like, that $10 cost basis is a great thing that you've done in the past. What are you looking forward in the future? And a lot of people are like, "Oh, I need to find the next thing for 2025 or 2026." It's like, so do you think that Rocket Labs is going to go away, or do you think it's? And they're like, "No, I actually think that it's going to continue to grow." It's like, so then why do you need to find a different company? Right? Like just because you've made a couple 100%, yes, the easy money's been made, right? It was silly, stupid that the company was ever valued at $2.5 billion, in my opinion, compared to where we are today. But even though the pendulum has swung, and would I rather the company currently be valued at $6 billion? Of course, because I'd still be buying hand over fist and might mortgage my house. But it's still at 12, and I think you easily can still get to $25-50 billion with what we know today, and then it could go north of that with a great release of Constellation. So, and we still don't necessarily know how much haste will be involved. People keep thinking it's like, well, Electron's not going to be that lucrative once Neutron comes out. It's like, well, you don't necessarily know how big of a test bed haste is going to be, and those aren't going to be cheap launches either. So, I mean, that could be a $500 million a year run rate business, and that could end up netting about $250 million. Well, if you net $250 million and put a 15x multiple on it, which I think is being generous, that program alone could be worth $4 to $5 billion. So anyway, just some food for thought there as well.
Yeah. All right, Scott.
I don't know, too much to add. I'm definitely the more cautious of the group, I think. And I mean, it's kind of what we were talking about last week, Vince, with Tesla being at $1 trillion, 3 years ago, and then collapsing by like 60%. And I mean, I even saw a post earlier today. Somebody was saying, like, I mean, it must have been a few days old or something, because I think Tesla is at all-time highs. But somebody was mentioning, they're like, oh, only 5% more, and then I'm finally break even since going all in on Tesla. And
that's a meme. I think that's a
oh,
meme.
is it?
Yeah.
I mean, like, okay, yeah, maybe that went over my head, but like, jokes aside, I think the point stands. It's like sometimes companies are a little more expensive, and sometimes they're cheap. And I would hate to like I just don't want us to all be a panel. So I'm trying to, echoing the same thought here, but I see a lot of people going all in on Rocket Lab. Like, I've even heard like, and maybe it's more memes, but like people talking about like retirement accounts and stuff. And I'm like, guys, like, just be a little bit cautious during a bull run. That's all. Keep a little cash on the side, and like, because you never know, like Rocket Lab could go down 60% from here, just like Tesla did. And you might be,
I hope it does.
Yeah, I do too. Me too. Because I didn't go all in at 25. Like that's. I don't know. There's a little more risk involved with every percentage that the stock goes up. And
no, I don't know if I still do this, Scott, but I messaged it somewhere in a group chat. But I basically was just like, I want to get to 0.01% of the company. I don't think I could ever get to 1%, but I was like, all right. So it's like one of two things needs to happen. Either Adam needs to buy back stock over the next 15 to 20 years. Obviously, I'm not saying today, right? But over the course, once we get to profitability, right? Hopefully with good margins, right? Not saying all free cash needs to go to buybacks, but at some point it'd be nice to get some share reduction rather than dilution, right? Because we're currently diluting about 3 million shares a quarter or something like that. 2.5% a year in terms of total share dilution, right? Or I need to get to 60,000 shares. So one of two things needs to happen there. But so I would love for the stock price to go down, because I'm about controlling as much of the company as I can, right? And I think a lot of people forget at the end of the day that that's what you're doing, right? You're buying percentages of these companies, and buybacks help to reduce and increase your actual equity percentage ownership in companies. So I think people just kind of forget about that from time to time. They get too caught up in the numbers. And I like to try to break things down to 1 and 0s, binary, right? And so to me, I just want to own as much of the company as I can because I think it's going to be successful. And something as simple as this, I had somebody, you know, I just in my one half of my shares, I wrote a covered call for next week for like, I don't know, it was like the $40 price. And it's like, it's still thousands of dollars of money. So you think about it, it's like you don't need to actually sell your shares to make money. You could just write very far out of the money, very conservative covered calls.
Let me tell you about those cover calls. I wrote a very conservative, very far out of the money cover call when the share was at $8. When the share was at $5 and the strike price was at $8, and that was $1 million I lost on that decision.
Very conservative of you.
So just food for thought on the cover calls.
Yes, I mean that is something that I dwindle on quite a bit because I think people often think it's like, well, if the company is in a very bullish kind of look, right? Do you really want to have covered calls covering your upside, or do you really want to be selling puts where you think it's really going to be moving in that direction? And if it stays at the same or goes down, you'd want to acquire more shares. So as I always allude to people, be very conservative in your cover calls. And even being more conservative than most, I still can sometimes get burned. So just be cautious.
Palantir.
Yes, exactly. No, 100%.
Yeah, I mean, cover calls, I currently hate them. My portfolio would be 4x than what it is if it was not for my lovely cover calls on Palantir and Rocket Lab. So I think I will make a separate video about it, just showing people the real risk with cover calls. Yeah, cool. I think it was a very good episode. We were very balanced today. It wasn't all just like bullish. I think we put things into perspective, and I enjoyed it as always. So thank you guys for being here. I don't know if you have anything else to say.
No, thanks for having me.
Nothing left for me to say other than whatchamacallit, subscribe to both of these guys if you're on my channel. These guys put out really good content way more often than I do. So you guys rock.
You too. All right. Ciao.